If a pantheon of original thinkers is ever to be made, one name will always find its place on the pedestal. Vallabh Bhansali of Annam. Hard work, compassion, and passion are some of the key virtues of his life. Mr. Bhansali, a pleasure to have you back on ET Now.
My pleasure.
We are completing our 6 years, and we wouldn't have reached this milestone without your support.
I'm a part of every noble intent in everyone who is trying to do good to the country. So I'm very happy.
But as we complete our 6 years of market leadership, the Modi government has just completed 1 year of their administration, and there seems to be some acknowledgement which is coming at a price that economic recovery is going to be back-ended. Growth will come, but growth will come at a price.
Indeed. So when someone wins a majority after 30 years, what does he do? So there are two choices to be made. One, he builds a jobs and production engine. And second, he starts paying heed to consumers. Consumers in a democracy could be, government servants, it could be farmers, it could be minorities, and so on. So it could be these voter banks. And therefore, these are the choices. And this is how we have seen over the last 30 years. We have had champions like Mr. Narasimha Rao, who didn't really look at the consumers and went for creating one hell of a production engine. I think Modi ji is also doing the same thing. That I better, if I have the majority, let me rebuild the production and the jobs engine. Obviously, the timetable of something like that would be very different. And I wonder if he's really looking at 1 year results, not that he wouldn't have liked them. But so I don't feel disappointed in a major way.
Do you think markets and corporates, they should realize that India is a large economy, a $2 trillion economy, and politics and democracy, they also have compulsions? Did market overestimated the rate of change in 2014 after the mandate?
I think so. I think Modi ji's charisma was extraordinary. Our, the kind of situation we found in was also so despondent, and therefore it was easy to be hopeful from, once we saw a charismatic leader like him. But I think what is probably what was underestimated that time by both the voters and the government, or the incoming government rather, the kind of difficulties that we had. I think just the environment ministry had so many difficulties. The finance ministries, the stuck-up bills had so many difficulties. So in every sector after sector, we had dug ourselves into such deep holes that no one really had an idea. And secondly, if you're building a new design of governance, you don't know how fast and how far will you succeed in it. And I think that is being attempted without a pause. So I think in a very determined, sustained manner that is being done. One feature of this governance model, and we all better recognize it, is that states are to play a large part. So take this picture. Now we have, elections are coming in some states. What is going to be the election agenda in the state? Is it going to be the same one as at the center, or is it going to be different? If it is a different, so for example, they are a consumer voter bank driven formula. So at the center, you believe that the states will do the rest of the work. But the state says, no, I'm not doing that. I'm still going to cater to, this bank or that bank. How difficult things will be. And unless it will be our success as a country and as citizens only if we are going to have this jobs, production, sovereignty formula for our growth, because that's the only growth formula. And that will have to come to a state, it will have to come to a city. And so I think that is the challenge, and you will have to go about doing it in a determined manner. Early signs that you've seen in the license that the government has allowed to the states on GST negotiation, things like that. They have shown a lot of leniency. Now we're stuck for 3-year, 5-year compensation, things like that. But I think that is the hope. And that hope, I'm so glad that they are, they would rather take the hope than throw in the towel and say that, look, let's go back to voter bank governance. So I think that is a big challenge for all of us.
So states really hold the key now.
Absolutely.
Given the kind of empowerment they've got going forward.
That is right.
The challenge for Indian economy is that the investment cycle has broken down completely, and some would argue that power, metals, some of the key sectors which led the previous boom between 2003 and 2008, those are broken down sectors. So the intention and intent is there, but the balance sheet and cash is missing.
But you know, the needle keeps shifting. Sometimes we don't see because the train comes from different directions every time. And look what's happening in Flipkarts, what's happening in services sector. So I think money is coming because people are seeing a different market. And money is coming into that. Obviously, it will not be the same thing as someone announcing a refinery that, okay, here is 30,000 crores, 40,000 crores. But do you know one thing? That the job creation in smaller enterprises is many times more than some of these large enterprises. The amounts seem very large. They be good for a bank because they don't have to do too much work and they write one big check. But that's not necessarily great news for the economy as such. They would have long-term production out of it. But sheer job creation, churning of the pot, creating of talent, creating of new competitive atmosphere is all done by smaller enterprises. And I think at least on the IT side or IT platform side, I think a lot of that is happening. I think things are happening on the tourism side. But again, all these places you will find, unless the states move in a determined, in a positive, in a modern way, all these engines will have difficulty.
One valid criticism of the current administration is that they've not handled the NPL problems correctly. The PSU banking sector or the PSU banks currently on a whole, I don't think the NPA quality will improve. Reserve Bank of India last week has indicated to the finance ministry that they want more capitalization. So there is no lending culture, and RBI wants finance ministry to give them more money. So where is this entire problem headed?
I agree with you completely. I think that we need to create a lot more comfort on this front, that the banks will be recapitalized if necessary, that we have some plans and ideas about, you know, the stuck-up projects, whether it be in infrastructure or related sectors. So indeed, you know, clearing up the mess by, you know, defreezing the coal business or the gas business, etc., is one part. But maybe, you know, all the whole system is clogged with these things. So you heard this very positive announcement from RBI that you're going to allow, you know, banks to take over assets. But we need a complete plan. So I don't think that will happen in isolation and suddenly. That's not that easy in a democratic country to, you know, enforce that. But so you need continuous action on that front. I agree with you.
And they represent 70% of the total, you know, risk in the system.
I wouldn't know about the percentages because it depends upon how you chop and dice. But you know, we do recognize, I think, in one of the newspapers today, there's very good discussion about distribution companies. And so we'll have to break the mountain into parts. So, you know, just as coal and gas supplies created a lot of difficulties in the power sector particularly, or some of the other sectors, similarly distribution companies, their losses and their lack of viability created difficulties for, you know, companies. So you got to tackle them. And so also roads, so also, you know, other areas. So take one sector, decide that what is not just going to get cured, how do you find a solution? Clear the system, take the carcass out. And, you know, government will have to bail it out in some manner. So find an imaginative way of doing it. I think it's a difficult area, but a very necessary area for the government to tackle.
So in the interim, do you think value migration will continue with the private players? Because on a daily basis, the private players, private NBFCs, they're getting better and better. The ability to lend, the ability to lend correctly, I think it's quite amazing.
It's, I won't complain about it for obvious reasons, but yes, indeed, one can't really be partisan in these matters, but you know, but some of the private sector banks were bold enough and they started selling those assets 50 cents on the dollar. They took that bet also. So the public sector banks have had a lot of problems. You know, I mean, today, tomorrow, you're going to have interviews for, you know, management positions. So banks without management positions when you need them the most is not an ideal situation. So I think a lot more work needs to be done.
You know, India is in a very unique position. There are some structural stories, there are some cyclical stories. We've got this great demographic advantage, young population. So if you have to carve out 2 or 3 things which appeal to you cyclically and which appeal to you structurally, which are those?
So there's no question India is a consumer market. And so investing in brands and investing in secular or what are called GDP businesses will always be attractive at the right prices. And from an investment point of view, you want to make investments that will be profitable, that will be sustainable. So there's no getting away from all of that. And so I think those are secular businesses. Prices are cyclical. So the market is always going to be like that.
What about the cyclical end, where you may just get a huge recovery if the economy comes back?
Investing in cyclical stocks like metals and commodities and so on, it requires a lot of specialization. It's not everybody's cup of tea. It's not a secular investment game. So those who have a biding advantage, or those who know how to create new advantage as the old advantage runs out, such companies would be few. And an average investor cannot be expected to master and understand these nuances. So that's a difficult area to invest in. For the pros, yes, they will invest when the P's are very high in commodities, and they'll sell when the P's are very low in these businesses, and the common investor will work the other way around.
Right,
so I think it's challenging.
But are good companies or genuinely good companies available at not premium but frothy valuations? What is good and growing is already outpriced.
Indeed.
Is that a challenge for an investor like you?
Indeed.
So what does one do then?
So one takes the challenge. One sharpens the pencil, digs deeper, and no investor should come to the market hoping that market will make it easy for him. He has to work hard, no question.
What do you make of the market behavior so far? We've seen a mid-air turbulence, some chop and churn. Some part of that is largely because of global factors, but in general, where is the trajectory headed?
I think on the whole up only. Whether you have a lull, you have a range-bound market for some time. Unless, as I said, unless you see this behavior in the states, that states don't care a damn about creating a production engine, job engine, etc., then you have difficulty. You say, we'll take the money from the center and we'll spend it on vote banks. It will be most unfortunate. But if one hopes that you're seeing mixed picture on that front, you are seeing state voters being as smart, and they want to move ahead and they vote for progress. If that happens, I think it'll be fantastic.
Foreigners have really taken a big leap of faith in Indian stocks, $20 billion on a yearly basis. They've sold this year, but there's nothing in comparison to what they've invested. If numbers don't come in by FY16 or by second half of this calendar year, is that the risk?
I don't know investors and investors, but if I were a believer that anywhere, anything has got done because someone is working to a design, and the design sometimes can have delays, and that's fine. If there's an investor like that, why would you worry? There's nothing to worry.
So it could be a quarter here, it could be a quarter there, but growth and earnings are coming.
Growth and earnings have to come. There's no getting away from them. Because you have seen, right? We have seen that majority of our friends, families, we all progress.
Yes.
The governments come and go, difficulties come and go, global collapses come. But if you are hardworking, you have aspirations, and you have so much opportunity around you, maybe it takes more effort than you would like to find those opportunities. How would we not grow? And I think a lot of the big boys in the world, they see this. It's also a relative game. That, okay, where else do you see growth in the world? So the 2.5%, the world starts panting, and you see 6.5%, 7.5%, 8.5%, and maybe more, people would come here.
If you're a long-term investor, maybe this market is challenging your conviction in the short term, but you are making a case that the margin of safety and the risk-reward ratio, as we speak, is in favor of a long-term investor.
At prices and individual stocks, one cannot talk about it generically. But India as a market, as a destination, I think would always remain. It's only got more and more attractive over a period of time. In between, of course, we start shooting ourselves in the feet and every organ, nobody will come to us. So, but otherwise, I don't see that changing.
What do you make of the Kane Vedanta and Sterlite merger? You've had nicest things to say about Mr. Grewal and what he's achieved in the past. Is he doing the right thing by simplifying the holding structure?
Indeed. I think here is a chance to create a big metals, commodities or resources company in the country. There would be investors who would have different views, those who like conglomerate, those who would like standalone businesses. And that's a part of the stock market and capitalism process. But clearly to have one large company, I think would be a good thing.
A keen shareholder would say Vedanta has taken my 25,000 crore away.
I think it's all in the price. The stock market is all about what's there in the price. The rest is okay.
But holding companies, Mr. Bhansali, globally they trade at a discount. So if I'm a minority shareholder, I would say, does it make sense for me to buy a small piece of a big behemoth which will never trade at a premium?
I think when the first round of merger happened in Vedanta, I think this possibility was very much debated by the investors. And I think it was all discounted in the price as well. So that from that point of view, sheer stock market democracy point of view, or the democracy or the hegemony of prices, I think this was fairly well established. And as I said, that there are people who like to buy holding companies or conglomerates and those who don't. It's all in the price. And I think it was considerably in the price. I think the prices have not moved since the announcement, so the kind of market knew what to expect.
But individually you would like to vote for this merger?
I'm not a shareholder in the sense of that I haven't thought about it. But I see that in the long term at these prices, I think if I'm a Vedanta shareholder, definitely I'm voting for it. If I'm a Kane shareholder, I have to see, they have sweetened this compared to what the media was trying to tell us yesterday. I would vote for Kane too.
The company which you have tracked and which you have admired for the longest time in your career has been Infosys. That company is going through a migration and serious migration. Founders are no longer the promoters. There is a serious intent to revive what could be called as an old machinery. Are you happy and not happy but excited with the changes that have been brought about?
I think it's only extraordinary companies who attempt something like this. And so when you take off and you fire a new engine and you start on a completely new path, you do tighten your seat belt and you do have a knot somewhere in the system, but you look forward to it. And I absolutely look forward to a leader like Vishal taking on the reins at Infosys and attempting new things. There will always be a suspense, which is not to take any credit away from what is being attempted. I just cherish governance in my own life, in my own company or in the country. And I think we have to attempt these things. To talk of, trusteeship in capitalism and to hang on to power and to appear, to look at that as the only model. Someone is attempting something like that. This is extraordinary. And Vishal Sikka brings great credentials.
Do you think the dynamics of the Indian IT sector is changing? That seems to be the broader message, at least from some of the big IT companies, that it's no longer the bread and butter business. We are no longer a body shop outfit. It has to be digital, it has to be smack, it has to be linear, it has to be global.
I think this has been a continuous process. IT companies we were relatively small compared to the big companies outside. Slowly we caught up and now we have become the mainstream. Once you become the mainstream, you are your own competition, and therefore your business model has to tweak accordingly. But that's only to be expected. But otherwise, I think the big four have been regenerating themselves on a continuous basis, and it's a great space to be in. Anytime, I think the whole technology as a culture, evolved dramatically in the last 20 years since the advent of internet. And therefore, in the first 5-6 years, when Indian companies were relatively small, the margins and all were easy, business was easy to get because, you could just park your car anywhere, your cars were small. Now, you're seen, noticed everywhere, and therefore you have got to be that much smarter. I think Indian companies have the smarts in them.
But IT is not a mature industry because they are no longer growing at 20%. I know the base effect has kicked in, but the growth rate has come down from north of 20 to little north of 10 now.
But that's okay, that's only to be expected. I mean, if I'm running a company with 10,000 people or I'm running a company of 100,000 people, my growth will slow down. But from a shareholder point of view, it's still fantastic. What a cash spigot it is, just throwing out, spewing out cash. That's extraordinary.
One sector which has done very well of late is the pharma space, and why not? Some great companies have been born there, Sun Pharma, Lupin. What's the future for that sector? Return on equity, return on capital, they are enviable right now. Can the run rate sustain?
Why not? I think if you look at global pharma leader companies, they have had those kinds of numbers for a long time. That's the model. They take high risks and they pay for it. So from time to time the engine sputters, but that's okay. I think Indian companies are extremely well poised. With the pharma consumption in this country itself is still at a very, very low level.
So where is value in this market, sir?
You have to look for it. It's not a value market at all.
So how would you define the current market then? A stock pickers market?
It's a stock pickers market. It's tough for stock pickers also. But yes, there are ideas. And so there's a little greater risk than there was. So the margin of safety is even more difficult to find. But well, every month we do come up with 2-3 ideas.
And your last idea was?
Well, not talking about that.
What is the future for some of the companies which have a huge debt but they have lovely assets? They have ability to grow, but they don't have cash or really cash flows to grow.
See, if you have lovely assets, there will be someone who will be a suitor for those assets, either as partners, as private equity. And I think it's just a wonderful world if you're a good manager and you're a good entrepreneur and you're ready to share your assets, particularly when you're in difficulty. So I don't see either the assets are not very good or the manager is not very good.
So can we see a lot of asset or distress asset sale going forward?
As I said, that you need a good manager and a good asset. So they are maybe together in difficulty, then they'll find a solution.
So we started this chat with what the current administration has done about governance and about making life simpler for Indians. What needs to be done? What would you like to see in next 3, 4, 5 quarters which would convince you that the current administration indeed means business?
I think one of the if you want to be a job and production engine, government, obviously ease of doing business, and government has the right ambition of taking us many notches. While you must do things to make business easy to do, it is even more important to do nothing to create a doubt in their mind. Yes. I think that's where I think a lot more work has to be done. I think the situation on the tax front, situation on the new laws don't give you this confidence that while there will be one noble man or one well-intended man who is trying to do everything easy, make easy for you, there'll be some babu or maybe someone higher up having no idea and doing most terrible things. And therefore it's rather sad that people are unsure about the ease of doing business. So I think that's one area. The second area, and which the government is tackling and people probably don't appreciate enough, is that how important it is to assert sovereignty, to feel sovereign. And I'm not talking about the small thing about Myanmar, but generally to create a feeling we are a strong country, we are not a walkover, we don't sign on dotted lines, we understand issues, we understand your issues. I think the way the Prime Minister went and talked to China about everything, the whole geopolitics very openly, I think was fantastic, that we are big boys and we are not afraid of anybody. I think this is very, very important. This has to translate into some of our institutions and some of our players in every field also taking that stand, feeling proud about it. And that is happening in some measure, but I think it gets punctured with this, creating doubts that, oh, if you are, you're venturesome, you want to be a risk taker and entrepreneur and so on, that there will be someone who will look at you in a very, very suspicious and very vengeful manner. I think that's most unfortunate.
Life is full, and we wish you good luck, and thank you for joining us, and thank you for your pearls of wisdom.
My pleasure. Thank you very much.
That's it on this special show. I'm Nikunj Dalmia signing off.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.
In order to mark our 7th anniversary, I have with me a very special guest, someone who needs no introduction. I've been interacting with him for over a decade now, and I've always admired Vallabh Bhansali for his original thinking, his simplicity, and his contribution to society. Mr. Bhansali, thank you for joining us. What a delight to have you back. We are interacting with you at a time when it's difficult to gauge the general environment. We've seen a crack in the month of Feb and March. We've seen a monster rally after that. In Feb, we were only discussing end of China. Today, we are discussing end of European Union. Why is the world such a fickle place?
These are big waves that are always a part of our life. They are not evident immediately, but a tsunami is building up for many, many years before it strikes. So I think there are primarily inequalities in the world that create waves. And so I think inequality in terms of political power, inequality in terms of financial power, the desire and ambition of people to bridge that gap. Once you start bridging that gap, then you want to, yourself become dominant and you want to be a hegemon. And I don't want to mention names, but you know what I'm talking about. And then you don't know how to create balance. So it is, I think these forces have been at play for a while. And then you have accompanying events, like you had the Iraq war, and that created a rupture in the whole process. And that was something unfortunate, artificial. And then we never recovered from it, actually speaking. So politically, that area is not settled. The financial damage arising out of that has not really got settled. One thing has led to the next. And we have managed to keep the show going. And in the meantime, we have seen much, much greater social inequality in the world. And this will manifest in many, many ways. Technology. Technology is something which is so extraordinary because what good it brings and what difficulty it creates. So in the short term, and in the long term, it will probably do all good. But in the short term, it also creates a lot of pain. Take, for example, while we did recognize the depression causing or the deflation causing capability of the Chinese growth. What is technology doing? Technology is bringing down to the prices of everything. It is removing inventory from everywhere, it reducing redundancy. That means my demand for so many things is just going down. When the whole price mechanism comes down, it is also deflationary. Now, would we wish that we don't advance in technology? We do want to advance in technology because it improves life at so many levels. Economic measures are probably lagging behind. That today the advantage that I have of quickly getting on WhatsApp and communicating, I beat the difficulties of the networks, etc. How do I capture it? And it is free. The value it has added is not captured anywhere. Therefore, there are many challenges that we are facing, that the world is getting better in many, many ways. The economic measures are lagging behind and then, we are not capturing it. These differences, in terms of wealth, in terms of various kinds of powers, we are not able to measure. And therefore, if you can't measure, you can't even solve it.
So how does one invest in this kind of an environment? Because you want returns, innovation is at its peak, disruption is happening, the society at large has got rebooted, the desire to buy good companies is still there, but the stocks are quite expensive.
Stocks are quite expensive relative to the difficulties, and maybe people are not ready to sell. Even very, very smart people who are sitting on 30-40% cash, say Claremans of the world and others, they still invested in at least the balance amount in stocks, which is saying what? Which is saying that if we have to look for wise people to partner, they're still in equities. And these are the equities that are expensive, and they will remain expensive. Because if I'm a passenger, as a fund manager and as a man with money, it's a difficult legacy. And I have to sit on somebody's chariot. I look for a charioteer. Those charioteers are still the great businesses, great business managers who will find their way irrespective of famine and flood, higher hail or sunshine. They will find it. So they think that it doesn't matter whether my stock will perform or not. I have given, as a fund manager, my money to someone who is even better than me, and I will pay the price. And therefore the stocks, good quality stocks, will remain expensive in these crises.
Will that apply for a market like India as well? Because the Indian economy has this unique advantage, which is rates are coming down, economy is on a mend, and genuine green shoots are now visible.
I would not count on rates coming down really, and one should not, because I think India is a growth economy. We have structural weaknesses created over several decades and several centuries before that, and we'll still probably take some time to correct those. And in those circumstances, the rain gets delayed, prices can go up, some commodities, go into scarcity. Oil, we have finished having the bonanza. So therefore, I don't count really on interest rates coming down. But on growth, indeed. So given that, the theory remains the same, that the money still wants to sit in the safest chariot. If I'm going to go downhill, I'll go faster. So that's fine. That's an additional advantage. So, and the argument remains the same, and maybe even more straightforward and more advantageous, because you have the tailwind behind you. And I see this tailwind really sustaining, and therefore I wouldn't like to think that Indian equities are expensive. Of course, if I can buy them cheaper, of course they're welcome.
Typically, bull markets, they always start when valuations, they look attractive, and then earnings, they surprise us. We've seen that happen in the previous bull market. So do you think we are on the cusp of an earnings recovery where the earnings surprise and the demand really will surprise? It's difficult to put in Excel and talk about it right now because your eyes cannot see that far. But your experience, if you can talk about your years of experience here.
So what you're seeing is that, for example, take an HDFC Bank, and companies in that category.
The bluest of the blue chip.
The blue chips in various sectors, and not only in banking sector. People are very willing to invest in them, and they've remained invested. Some event or the other may bring down a price of a particular stock, but the people are back onto it immediately. And I think that predictability in the Indian economy has grown tremendously over the last few years. That people will want to take a 5-year, 10-year, 15-year view and invest into those stocks. And therefore, given the fact that that excitement moment was probably in March, April 2014, when people suddenly thought that we will get a stable government and the market took off, that kind of underinvestment is gone. Market is, people are fairly well invested, except the common man, unfortunately. And the retail surge may come, but the values are not really of a distressed market where both can happen at the same time. So now only earnings growth will happen. That will not create that kind of momentum that we have finished seeing. So, but that's okay. I think in a growth-starved world, if you're still growing at 7.5% or 7% also over a long period of time, and our earnings growth is of 10-12%, I will still make handsome money. And I as an equity investor, my ambition or my expectations of the market are coming down all the time.
What has worked for us in the past, and the complexion of the Sensex is such that it will always grow in a handsome multi-digit return, because sometimes it's IT, sometimes it's pharma, sometimes it's domestic stories. But what has worked for us in the last couple of years is this combination of a weak dollar and growth in IT and pharma. That could be coming to a standstill for a variety of factors. So where do you think the momentum now will come for the economy, for the markets?
If the economy picks up, the whole economic cycle that it starts going into infrastructure, housing, and then it goes into consumer and durables, and then the whole cycle plays out. I think the same cycle can play out brilliantly now. And you've seen early moves in Larsen & Toubro produce one slightly better result, and the stock is off. So the contracting companies are already being targeted. There are people who are, recommending real estate stocks and things like that. So I think new cycles will happen. And I think, while the dramatic stories seem to create an impact that, something unique has happened, but they're all a part of the same cycle. that the knowledge sectors take a lot of time to ripen, and then they produce those rewards. Because they take a lot of time to ripen, people do not see the advantage of those stocks. And so also that, when relatively economy is going through a structural change, some of the stocks or some of these sectors like infrastructure, real estate, etc., they go into a deep slumber, but they also emerge, and they also emerge strongly. So I think it's very likely that some of those sectors will emerge very strongly. So the market will find its winners. I have no problem on that.
The IT sector per se has got rebooted. Technology is changing, old technology is moving out. The buzzword is disruption and digitization. So what could be the face of Indian IT sector in 2020, 2021?
You could see new players emerge. I mean, IT was not thought of as IT services. They were available at cheap multiples at one point of time, but it changed. And so also it could change, that IT could become smaller, it could become highly advanced. And therefore, the jury is still out that whether this manpower-led IT sector is dead and gone. I don't think so yet. And this is because while the need for technology has remained constant, its delivery is changing. But the technology service providers were doing precisely this. There was always a technology, it was moving generations. And now also it seems to be moving a generation. In this generation move, whether the service companies will still have a role, because they can see the generational change much better than we can, and whether they can create a business out of it, the jury is still out. And so at worst what may happen is that the growth may slow down. They will find a formula to limit their manpower cost, freeze the manpower. So I don't think the heavens are falling really on that sector. Maybe the kind of fantastic rewards that we have seen, I mean, they have not been coming for a few years, and maybe they will slow down. But I don't see that sector becoming irrelevant in a hurry. And they will always remain what we call the local issue, hedge sector. So that advantage will continue with them. Every time you see rupee weaken, a lot of people believe that rupee will continue to weaken 3 to 4% a year. So if they can grow at 8, 10, 12% and they can have 3, 4% rupee gain, yeah, they're all right.
But the definition of big four, TCS, Infosys, HCL Tech and Wipro, I mean, we like to call that these are the big four. Do you think the definition of big four could change in the next 5 years? New companies could be part of that big four?
I can't see them, but I like to believe that these surprises come. In the 90s, you didn't see Infosys and Airtel and Sun Pharmas of the world, but they always come. I think in a free world, I think the kind of freedoms that are growing, and the government's today's announcements also creating more freedoms. So you're seeing more freedoms for businesses to grow. And in that environment, the new boys, they are faster.
So what do you make of the new FDI laws? I mean, do you think this time, now that the gates have been opened, flood of dollars will start at least in sensitive sectors?
One does not know, because it depends upon, I haven't really tracked that who are all waiting at the gate and who will jump in. But I think the totality of reform, totality of attitude in the country today is inviting. So the FDI has done well over the last 2 years, and I do not see any reason why FDI will not go up given this further liberalization. So I do not know about money just pouring in, but I think money has been growing, the money flow has been growing steadily, and I think it will continue to grow, definitely.
Which is one government policy action do you think markets are underestimating the importance and impact of that?
I think market is generally right, but maybe slightly cautious, is on the infra spending. That the government has talked a lot about the infra spending, and they are committed to do that infra spending. I think it will have a big impact. The market is right in terms of saying that, look, we need to see the money on the ground. We want to see that translate into orders on contractors and subcontractors and money flow all the way. And so the market, having seen famine for so long, is probably right in estimating that. But I think that will make a big impact. What they're talking about, roads, railways, defense, transmission, the non-renewable, the renewable energy and things like that. I think all of that will have a big impact on the economy.
A real big surprise factor has come from an unexpected source, and that unexpected source could also be called disruption, Patanjali. No one thought what brand Patanjali could become, both in terms of market share and in terms of revenue. So is that India, the art of innovation, the art of disruption?
One of the many things, and I don't think that every Indian brand can hope to achieve what they achieved. And there's no use going into history that he was a yogi and what he did at personal level for people that created the huge credibility. So what Patanjali has shown is that the brand building was done by the founder. And therefore, his personal personality, sacrifice, effort, if you put a money value on it, they have taken the same number of years and effort and expense as any other company that would have. They are still subject to the rigors of distribution, quality, innovation, etc., the logistics and so on. So just substitute the amount of money that a regular FMCG company or a brand company spends on building all this by the effort that Swami Ramdev put by holding all his camps and making a huge personal effort. So otherwise it's just one more company. So I do not think that it's a revolution and it's a trend of some kind. You're not going to see someone like his person with his stature, personality, and the effort and the connect. So that's quite an exceptional thing.
There is a lot of debate about what is the real health of PSU banks. Cleanup has happened. They're looking healthier. They've managed to really, swallow the bitter pill, if I may say so. But what is your understanding of how deep-rooted the problems are, and how far are we away from the real recovery there?
See, the banks were the face of the system, and maybe they're getting all the brickbats. But whatever happened in the banks was due to a system. I think Uday Kotak said something brilliant, and hats off to the person. He talked about crony capitalism, and he also talked about crony socialism, that how more harmful is crony socialism. So the difficulty that you're seeing in the banks is the result of crony socialism. As long as we are reversing that, and when I'm saying we, meaning the system as a whole, which means the government, the Reserve Bank of India, the new kind of boards, and the social support, then let's clean up, it will definitely get solved. When the system as a whole decides to change direction, things will happen. So the problem of the bank has to be recognized as the problem of the political thinking, the way our governments were run, the kind of cronyism of one kind or the other that prevailed, and that was the result. If now we start changing the constituents, the factors, the drivers, I'm sure the result will also change.
But as an investor, is there an opportunity? Is it time to take that leap of faith now in PSU banks?
I haven't studied them deeply, so one must really do a grounds up approach in like everything else. Every time you'll talk to me, I'll talk a bottoms up approach only. So you have to take that as an investor, and the role or the rigor expected of an investor is different from that of a patriot or a citizen. So therefore the investor has to be a lot more cautious, because there are many uncertainties in that game. So subject to that, I think if somebody wants to play a systemic bet, I would think that yes, it's open to that systemic bet. But please do your homework.
But again, because of technology, because of behavior, because of adaptability, the entire financial space is changing. You got small banks. RBI is now giving banks on tap, so to speak. Who will be the eventual winner in the banking space?
It's difficult to say, but I think banking is a simple business. All those who do banking by the book, they will win. And by the book is, I have diversified liabilities, I have diversified assets, I invest, I grow to the extent necessary and not beyond. And I just be a conservative, a bank. I will do well in whatever business I do. Yes, innovation is a given now. Technology is a given. So I don't think it's anybody can do without them. So both will happen. And I think several of our banks are capable of it. Those who will miss a trick will probably lag behind. So I think technology is like opening branches was 15 years ago. So technology is doing nothing but opening a branch with an individual customer. Just as that created a huge amount of flow of CASA, this, that, etc. I think the technology and a mobile app and things like that are replacing that physical world. So those who can simplify this, look at the whole process that banking remains the same. Now it is a branch for an individual. And just I had a smart credit department which went into credit history, analysis, etc. I have to speed that up also using technology. So therefore the banking at the core remains a simple business. These are tools that have come up. I got to recognize them, not get upset, not get too worried or petrified of these new tools. Just understand for what they are, use them. Anybody who will use them will continue to win.
But if I look at the share of banks in the Nifty or the Sensex, they have a disproportionate share now, 35 to 36%. Do you think there is a threat to that, or the market share or the percentage share will only become higher and bigger?
See, the BFSI has to be 30 to 40% of all mature markets. I saw that as a big opportunity, and I recommended I remember to an LIC chairman many years ago, just shut your eyes and fill your buckets up. This is the way we will go, because this insurance hasn't got added yet, or it is indirectly represented, embedded in the other companies. So insurance has to come, pension has to come, money management firms have to come, housing finance is still growing. So all this is a part of BFSI. This bucket will be large always.
So the composition in terms of large, big banks or private banks getting lion's share now, they're getting large pools of the profit now. Do you think those trends are here to stay? Are these mega trends for another 5-7 years?
No, I wouldn't say that, because for example, if ICICI starts taking its babies public, ICICI's market share will shrink. So also HDFC. So essentially I think the pie as a whole for BFSI has to remain large, and maybe can get even slightly larger from here. But individual bank stories will depend upon what happens. So I wouldn't make that trend.
Something which always has been very close to your heart is the entire governance issue. We've talked about it openly, and you've again been cited that if the governance standards are so low, society is not going to head anywhere. Crony capitalism seems to be coming out. There is a hint that government is trying to fix what has been a Raj problem, which is corruption. So in terms of an governance standard, do you think there is a improvement there?
I think in terms of the intent, clearly so. And to the extent that the theory says that, improve the fountainhead, the rest will change. The fountainhead seems to be doing well. The government is extremely vigilant, and we hear nothing at all happening at that level. And slowly that will translate into other areas. But there are some incongruities in the way our society has functioned for years. And we need to do a lot more. So therefore, I don't think the vigil should drop at all. And if at all, we have to make a greater effort to bring better governance. Take, for example, the response to Swachh Bharat. Has the country responded? Indeed, it has responded. But anywhere near that it will, gladden our heart? No. This is governance. This is something that a citizen benefits himself. There is no government that benefits from it. But the citizens are not responding to it. So maybe the whole follow-up mechanism, say between the government to the next level of leaders down to the citizens, that whole process, the structure of that kind of leadership where you translate a big vision into ground level is still not there. So because we haven't built enough institutions, we haven't created what we call layers and layers of leaders in our society, and that applies to all aspects, whether it is banking or whether it is technology, defense. In all areas we've been lacking behind. And I think as we create more freedoms, as we create better education system, I think a need for lot more, not just colleges and universities, but top class institutions is very, very necessary.
So true, so true. Really appreciate your time, and glad you could
My
join
pleasure.
us on this special forum. That's it. With that, it's back to the studio.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.
Vallabh Bhansali, do you buy that comment from the finance minister that he's gone ahead with reforms, not the dramatic ones, but incremental reforms? Is that the sense that you're getting as well from this budget?
I think I buy his intent argument, but whether there has been enough policy action at this stage. I think if he's able to bring out or actually achieve using IT for better tax compliance and particularly better subsidy and relief delivery, I think his statement will turn out crystallized and acted upon. But till then, I have full sympathy with what he's saying.
That said, do you think the market is then overreacting? In many ways, this is a case of the FM under-promising and over-delivering?
I think the markets have reacted to more than the budget. I think there is a rally in the international markets. There may have been a bit of an overbought position. And therefore, I would think that, if the market keeps up with this momentum, it will run ahead of the merit. Because I think the question of spurring the investment cycle, removing the supply side bottlenecks, and creating cushion. This budget has no cushion anymore at this level, the way the market is going, that we must recognize there is no room for error, no room for any downside in the budget numbers. As a matter of fact, we are all struggling to see how the fiscal deficit will be contained at 4.6%. So I think I have welcomed the budget, the no sooner it was announced, because I think it had shown the right kind of sensitivity. But can we keep up this momentum? The market seems to be getting carried away.
My guest on the show today believes in one simple philosophy: keep it simple. He is an inspiration for all, a hero for some. Vallabh Bhansali, Chairman, Anant Securities. So Bhansali, what a delight to have you on ET Now. Thank you for joining us. I'll first start with the moot point, which is that is the Indian economy slowing down, and is the slowdown here to stay for an extended period of time?
Indeed, it is slowing down. Whether it is here to stay for a long time, I hope not. And I would say, I think not too. But one can never take the future for granted. I think the momentum is on the country's side. There are a lot of good things that are still sustaining. But I think maybe a lot of people are taking it for granted, which is a worrisome thing.
So what is the good part and what is the bad part?
The good part is clearly the sense of enterprise, that after Mr. Narasimha Rao's permission to the country that, okay, guys, go and do what you want, and a number of good things that happened after that. The enterprise engine in the country is still very well oiled and is running over time. But I think at some level, at least in the bigger engines of enterprise, you're seeing some dismay, some disbelief, a lot of roadblocks for them, and that is a cause of worry. What is still exciting to see is that enterprise at lower levels in this country is blossoming beautifully. So whether it is in technology, whether it is in services, whether it is in products, I think one of the happiest things that that I have been observing is the way our exports have grown, and how these exports are now increasingly coming from small and medium enterprises. And so what happened in the early part of this decade, when Indian larger enterprises learned to believe that they could cut costs, that they could remodel, that they could make good products and export, the same discovery is being made by smaller companies. And this is what made Germany very strong. That's what made Korea very strong. That's what made China very strong. And I'm seeing that phenomenon. And I think it's not much noticed or much talked about. I think it's a fantastic story.
Would you agree with the fact that governance is the single biggest concern for Indian markets, and it is a bigger concern than inflation or interest rates or commodity prices?
Indeed. I think if you look at Europe, you find a variety of countries there. The story is the one of governance. those who looked ahead, who looked to sacrifice today so that they may gain tomorrow, are the ones who are strong even in this melee. And those who think otherwise, things are different. So democracy is not a license for everyone. Democracy is not a question of welfare at any cost. Democracy is a question of wellness and fairness equally. And therefore the governance has to be thought of in this question. I have just commissioned a research that within our democracy, are we paying a large price? Are our elections an occasion for the largest giving out to people? My early research shows that it may not be so. But the fact is that democracy cannot become a largest. A democracy has to function as welfare state. And there are huge differences. We haven't built enough institutions, we haven't built enough think tanks, and therefore you're already seeing that the national agenda, the core agenda, is being attempted to be hijacked, maybe by well-intentioned people, but it does cause dismay.
But by and large, are markets at these levels factoring in all the bad news?
I would say a lot of it. Because given the next 20-year, 30-year outlook for India, one would not think that economy would slow down and investment decisions held back. Indeed, investment decisions are being held back at this point of time. Some of them are not being taken, and therefore the markets are quite smart in doing this, in sensing this. So what may happen is that maybe the markets have not gone through a capitulation phase, and maybe you may have one more move, what will be called the capitulation move. But I think the markets have been boring for so long, and I kind of liked it. I kind of predicted it, that look, it will be a range-bound kind of market for a long time, and I wish it goes till June, when we can really see the policy hand of the government, that whether, after all the elections are out, they feel unhandicapped and they do what they have been saying they will do. So I think one is waiting for that moment, and I hope that that the policy action comes soon. And the market is holding back in the hope that, okay, let's forget everything, we've been patient, and something will move now. I'm afraid that if things don't move now, the markets may not like it.
Do you see 15,000, and I'm just using 15,000 for reference here, acting as a solid base for Indian markets?
I would think so.
What could push markets back to 15,000? Global factors or lack of policy reforms?
Market is too complex for me to say there will be one factor or the other, but I definitely would re-emphasize that the market is expecting policy reform and good sounds on that front. Now, if something else, redeems that lack of reforms, I do not know. Therefore, I would not want to hazard a guess as to what will trigger a fall to 15,000, but I think not having policy reform fundamentally is something that would worry me.
Would you bang the table and predict that on a 3-year basis, Sensex will be at least 20% higher from the current levels on a 3-year basis?
I would.
And why do you say that?
I think even the consumption-led growth that we have had is not going to go away. It may slow down the growth. It may lead to an unplanned Bombay where you have slums and you don't really have nice cities. But that's okay, they will still cause growth. What we are saying when we talk of governance and policy reform is that you're going to have planned growth, you're going to have a beautiful city. But the city is going to grow.
The rampant speculation in commodity prices, given the way how commodity prices have corrected off late, do you think that is over?
I think what we call the financialization, monetization of economy and then financialization of the world economy, I think it's a huge phenomenon, and it worries a lot of people, whether it worries people like Mr. Warren Buffett, it worries people like Bill Gross, that the reality and the financial reality, they diverge so much. And you can't help speculation when the national governments will manipulate their currencies and will manipulate their interest rates. Some of these are necessary outcomes or predictable outcomes. And therefore, it's becoming very difficult to say that commodities will come down simply because they were bubbles. Because you've seen bigger bubbles get blown up. I mean, copper, and so there are a lot of commodities where we have seen that they hit lows and one thought that they will never hit the highs again, and most of them are, hitting the highs. So it's a dangerous area.
From an India perspective, for next 12 months, which to your mind could be the biggest moving part?
I think manufacturing is going to be very big. I think this excellence on export front that is emerging is going to widen this. Consumption is going to force that we increase the supply of manufactured goods. I heard that the government has also been busy preparing a good policy document on promoting manufacturing. If you look at the cyclical turn, the rotational churn of sectors, it was IT that led this, and then we had financial services, and then we had a push to infrastructure. I think it's time for manufacturing, and I think without manufacturing we won't be able to create enough jobs, save. Today we have only food related inflation putting pressure on prices, but it could be manufactured goods also. So I think both the need and the opportunity point to very good returns in the manufacturing sector.
Do you expect RBI to move aggressively next week?
I don't think they'll move aggressively. I think they finished making all the aggressive sounds. If you and I started the interview talking about slowdown in economy, where is the scope to be aggressive?
What do you make of the restructuring at Infosys Technologies?
To have someone like Mr. Kamath as the chairman of the board is a fantastic choice. Mr. Kamath is not only a great business leader, but ICICI has been an Infosys customer for the longest time. Their Finacle was probably, I think, first sold to Infosys, to ICICI. Mr. Kamath himself built a BFSI empire. BFSI is the largest segment of business for Infosys. So someone who understands the business of the company, both as a customer and as a sector expert. He is a business leader who has seen challenges, who has met challenges, and therefore who better than him? I think shale looks extremely exciting, more than the opportunity in a large market like US. I think the technology itself, that has come up in shale gives Reliance a pioneering, or rather I would say an early advantage in that country.
So Bhansali, you've always believed in buying businesses which offer value and where markets are mispricing the growth. So which are the pockets, sectors of businesses where markets are mispricing growth on the lower side?
I think they're all over. In a bad market, people are, because for technical reasons, someone wanting to get out in a hurry, or because of some adverse elements, these opportunities come across sectors. One case was like LIC Housing Finance, where some scandal hit it, and I think a lot of people thought that the company was a sound one, and so you get those opportunities. Such opportunities, I think, are surfacing everywhere. The other big news is that some of the exit valuations that we have seen for companies across sectors, whether it was a chemical manufacturer, whether it was a paper manufacturer, whether it's a technology company, whether it was a BPO, they have been eye-popping numbers. And therefore, investors should take courage that if you bought a good business, you're sitting in a good business, there's a lot of inherent value there.
But Mr. Bhansali, if I look at some specific consumption-oriented stocks or the popular stocks, Jubilant FoodWorks, Titan Industries, VIP, Nestle, these stocks are trading at P multiples of 30 plus, 35 plus, even 40 plus. Is there a bubble in making there? Selectively though.
There could be. So I don't want to take one particular stock. But clearly when people are wanting to play a discovered story again and again, this is what happens. So I think in this world currently, a lot of bubbles are being blown up again all over because the money supply is still pretty good in the world.
12 months ago as a house, you were bullish on real estate and power utility companies. Unfortunately, these companies have not managed to generate a lot of wealth. So what are your thoughts on both these businesses now?
I think both of them hit regulatory challenges. And these things happen. But I think basically these are good sectors to be in. And if the values have come crashing down in these, one should definitely look at it. The power sector particularly has found execution extremely challenging. Some of the policy moves on material supplies and the linkages were completely unexpected. And I think there is a story which is developing, and there is a concern that how does one make long-term decisions. As and when clarity emerges on that, I think it will be a good sector, because you can't really go wrong from a demand point of view. Within that sector, you find companies that have shown execution, that have shown far-sightedness in building reserves and creating own linkages. They're still trading well.
So avoid power in the short term, in the medium term, buy real estate stocks. Can I safely assume that is the message?
That's not what I'm saying. I think amongst the many things you picked up too, but I think there were a lot of themes like mid-sized pharma that we were bullish on, and so a lot of other themes have gone right. The regulatory issues are there before all of us, and sometimes it's hard to see that when we need much better regulation, having regulatory snarls for whatever reasons. I'm not saying that there weren't any good reasons, but it does make things difficult for regulatory intense businesses. So I think one could take a call that whether one wants to be away from regulatory intense businesses or one wants to be in it. There's always a flip side, that it's regulated because demand is there forever. And if regulation is there, sometimes it will not work in your favor.
Certainly. What do you make of the restructuring at Infosys Technologies?
I think it's wonderful, absolutely. I think this restructuring has been very, very predicted, extremely well planned, and I think the choices are fantastic. One has to understand that Infosys is a creature of governance. We talked a lot about governance. And they simply said that if you have the right design and the right intentions, nobody can stop you. Even in this decision, they've gone by the same principles, that those who know the company well, those who know the business well, those who will arouse the highest amount of confidence, they looked at all those issues as probably a little more important, if not as equally important, as those who can push growth, those who can, manage things, who have imagination. So I think they have brought a great balance. And to have someone like Mr. Kamath as the chairman of the board is a fantastic choice. Mr. Kamath is not only a great business leader, but ICICI has been an Infosys customer for the longest time. Their Finacle was probably, I think, first sold to Infosys, to ICICI. Mr. Kamath himself built a BFSI empire. BFSI is the largest segment of business for Infosys. So someone who understands the business of the company, both as a customer and as a sector expert. He is a business leader who has seen challenges, who has met challenges, and therefore who better than him? And then he has had the privilege of being on the board much before he became the chairman, so he's quite familiar with all the challenges. All in all, a fantastic choice.
What about IT stocks? Do you think the springtime for IT stocks is over?
Seasons are cyclical. They come again and again, and I think it's just that. Because the markets were slow, the markets were going, people were looking for defensive sectors, and so maybe, IT stocks had their own run-up. Then there are currency aspects also. So I think they are well-managed companies. The opportunity is large. They continue to produce, more than 15-20% growth every year. What else could you want in a stock?
Is Reliance a great contra buy at these levels? I know you track that one with a magnifying glass.
I haven't really, looked at Reliance acutely. I think what they're doing in terms of diversifying their risks, both in terms of bringing BP to manage the technology better, and in investing elsewhere. I think shale looks extremely exciting, more than the opportunity in a large market like US. I think the technology itself, that has come up in shale gives Reliance a pioneering, or rather I would say an early advantage in that country. So I think, and the large, the investment they are making in doubling their capacity in most areas, I think at a certain valuations, Reliance does look very exciting.
So where do you mind, Mr. Bhansali, the next leadership for Indian markets could emerge from?
I think Indian companies are leaders are thought of. I mean, if an Adani goes and buys a major port in Australia, and that's an auction, I think it is an extraordinary asset. So, someone has bought a great coal mine, someone has bought an infrastructure company, a port. We are going and buying in chemicals, in metals. So, I think Indian companies, India is a leader country today, and there are enough acts of leadership. I think, how can we forget JLR? It was the pride of the Western world, both the brands. And an Indian company bought it, and which was known for the small car, and now they have, turned around a luxury car and they made a profit of £1 billion. So I think it's just no more one segment. I think the fact that you are an Indian company, you are respected today. If the government takes a view that we need to make a disinvestment, because that's good, and you have to do it in the market of today. It's like, we have a saying in Marwari that if a man dies today, you have to bury it today, and you have to bury where he dies. So these are, moment decisions, and great leadership lies in taking those decisions.
How has the life changed for Vallabh Bhansali after the Axis Bank and deal?
Well, a lot of my time is going into, completing the deal and thinking of, how we will execute the design that we set out to do.
So Bhansali, you've always believed in buying businesses which offer value and where markets are mispricing the growth. So which are the pockets, sectors of businesses where markets are mispricing growth on the lower side?
I think they're all over. In a bad market, people are, because for technical reasons, someone wanting to get out in a hurry or because of some adverse elements, these opportunities come across sectors. One case was like LIC Housing Finance, where some scandal hit it, and I think a lot of people thought that the company was a sound one, and so you get those opportunities. Such opportunities, I think, are surfacing everywhere. The other big news is that some of the exit valuations that we have seen for companies across sectors, whether it was a chemical manufacturer, whether it was a paper manufacturer, whether it's a technology company, whether it was a BPO, they have been eye-popping numbers. And therefore, investors should take courage that if you bought a good business, you're sitting in a good business, there's a lot of inherent value there.
But Mr. Bhansali, if I look at some specific consumption-oriented stocks or the popular stocks, Jubilant Foodworks, Titan Industries, VIP, Nestle, these stocks are trading at P multiples of 30 plus, 35 plus, even 40 plus. Is there a bubble in making there? Selectively though.
There could be. So I don't want to take one particular stock. But clearly when people are wanting to play a discovered story again and again, this is what happens. So I think in this world currently, a lot of bubbles are being blown up again all over because the money supply is still pretty good in the world.
12 months ago as a house, you were bullish on real estate and power utility companies. Unfortunately, these companies have not managed to generate a lot of wealth. So what are your thoughts on both these businesses now?
I think both of them hit regulatory challenges, and well, these things happen. But I think basically these are good sectors to be in, and if the values have come crashing down in these, one should definitely look at it. The power sector particularly has found execution extremely challenging. Some of the policy moves on material supplies and their linkages were completely unexpected. And I think there is a story which is developing, and there is a concern that how does one make long-term decisions. As and when clarity emerges on that, I think it will be a good sector because you can't really go wrong from a demand point of view. Within that sector, you find companies that have shown execution, that have shown far-sightedness in building reserves and creating own linkages. They're still trading well.
So avoid power in the short term, in the medium term, buy real estate stocks. Can I safely assume that is the message?
That's not what I'm saying. I think amongst the many things you picked up too, But I think there were a lot of themes like, mid-sized pharma that we were bullish on, and so a lot of other themes have gone right. The regulatory issues are there before all of us, and sometimes it's hard to see that when we need much better regulation, having regulatory snarls for whatever reasons. I'm not saying that there weren't any good reasons, but it does make things difficult for regulatory intense businesses. So I think one could take a call that whether one wants to be away from regulatory intense businesses or one wants to be in it. There's always a flip side that it's regulated because demand is there forever. And if regulation is there, sometimes it will not work in your favor.
Certainly. What do you make of the restructuring at Infosys Technologies?
I think it's wonderful, absolutely. I think this restructuring has been very, very predicted, extremely well planned, and I think the choices are fantastic. One has to understand that Infosys is a creature of governance. We talked a lot about governance. And they simply said that if you have the right design and the right intentions, nobody can stop you. Even in this decision, they've gone by the same principles, that those who know the company well, those who know the business well, those who will arouse the highest amount of confidence, they looked at all those issues as probably a little more important, if not as equally important, as those who can push growth, those who can, manage things, who have imagination. So I think they have brought a great balance. And to have someone like Mr. Kamath as the chairman of the board is a fantastic choice. Mr. Kamath is not only a great business leader, but ICICI has been an Infosys customer for the longest time. Their Finacle was probably, I think, first sold to Infosys, to ICICI. Mr. Kamath himself built a BFSI empire. BFSI is the largest segment of business for Infosys. So someone who understands the business of the company, both as a customer and as a sector expert. He is a business leader who has seen challenges, who has met challenges, and therefore who better than him? And then he has had the privilege of being on the board much before he became the chairman, so he's quite familiar with all the challenges. All in all, a fantastic choice.
What about IT stocks? Do you think the springtime for IT stocks is over?
Seasons are cyclical. They come again and again, and I think it's just that. Because the markets were slow, the markets were going, people were looking for defensive sectors, and so maybe, IT stocks had their own run-up. Then there are currency aspects also. So I think they are well-managed companies. The opportunity is large. They continue to produce, more than 15-20% growth every year. What else could you want in a stock?
Is Reliance a great contra buy at these levels? I know you track that one with a magnifying glass.
I haven't really, looked at Reliance acutely. I think what they're doing in terms of diversifying their risks, both in terms of bringing BP to manage the technology better, and in investing elsewhere. I think shale looks extremely exciting, more than the opportunity in a large market like US. I think the technology itself, that has come up in shale gives Reliance a pioneering, or rather I would say an early advantage in that country. So I think, and the large, the investment they are making in doubling their capacity in most areas, I think at a certain valuations, Reliance does look very exciting.
So where do you mind, Mr. Bhansali, the next leadership for Indian markets could emerge from?
I think Indian companies are leaders, are thought of. I mean, if an Adani goes and buys a major port in Australia, and that's an auction, I think it is an extraordinary asset. So, someone has bought a great coal mine, someone has bought an infrastructure company, a port. We are going and buying in chemicals, in metals. So I think India is a leader country today, and there are enough acts of leadership. I think, how can we forget JLR? It was the pride of the Western world, both the brands. And an Indian company bought it, and which was known for the small car, and now they have, turned around a luxury car and they made a profit of £1 billion. So I think it's just no more one segment. I think the fact that you are an Indian company, you are respected today. If the government takes a view that we need to make a disinvestment, because that's good, and you have to do it in the market of today. It's like, you know, I mean, we have a saying in Marwari that if a man dies today, you have to bury it today, and you have to bury where he dies. So these are, you know, moment decisions, and great leadership lies in taking those decisions.
How has the life changed for Vallabh Bhansali after the Axis Bank and deal?
Well, a lot of my time is going into, you know, completing the deal and thinking of, you know, how we will execute the design that we set out to do.